We are asked a lot of times, what are discount points? Sometimes also we're asked, what are buy down points? And I want to make sure no one's confused. Discount points is a more accurate term for buying down your interest rate. So for example, let's just say today the going par rate, and most people understand par, like if you're golfing, par is like the number you should try to get, right down the middle. You don't want to go over par, you don't want to, well, you do want to go under par, but par is like right down the middle. Let's say the par rate today is 4%. If you pay discount points, you can buy that rate down from, let's say, 4% to 3%. Yes, you have to pay additional money. Discount points cost money. Generally speaking, one discount point or two discount points can be paid on a VA loan to get your rate lower. As you can imagine, if you're willing to pay 2 points, you're going to buy that rate down lower than someone that's only willing to pay 1 point. Now, what does 1 point mean? Here's an easy example. Let's say you're buying a $100,000 home. You're not putting any money down, so you're going to borrow a full $100,000. 1 point is $1,000 or 1% of what you're borrowing. 2 points is what? $2,000. Now, the VA will allow you to pay more than 2 points, though they will not allow you to roll more than 2 points into your loan if you're doing a refinance. During a purchase, you're going to have to bring those points to closing, and we don't see people paying points often on a purchase unless they can get the seller to pay that for them. Because when you're buying a home with a VA loan, the goal is to bring no money to the table. We can help set that up for you, but again, buying those points will require you on a purchase to bring money to the table. So the question is, does it make sense to buy points or to pay for discount points? And every situation is different. Here's an easiest rule of thumb. If you plan on being your home for, let's say, more than 3 or 4 years on average, you might consider paying points. It increases the cost of the loan, but since you've got more time to offset those costs through lower monthly payments, it could be feasible. And we can help you run the math on that. It's a very simple mathematical equation. Let's just say that 1 point costs you an extra $1,000, but that 1 point saves you an additional, $100 a month. Well, as long as you're going to be in the home for the next, 10 months, it makes sense. And every month after 10 is additional, gravy or frosting on the cookie or whatever you want to call it. So if you're confused, call us. You can chat with us. You can ask us questions online. But discount points help you bring your rate down lower than it otherwise would be, and you generally do them on a refinance.